Welcome to Explain the Charts, where we break down the news and chart data to help you make informed trading decisions. Today, October 29th, 2024, we're focusing on GBPUSD, the British pound against the US dollar, a pair that's been showing some interesting volatility recently. We'll start by looking at the current market sentiment and recent news headlines, then dive into the chart data to see what the technicals are telling us. Let's begin with the news. A quick Google search reveals a mixed bag of headlines, with some suggesting a recovery for GBPUSD while others point to continued weakness in the pound. The recent softer-than-expected U.S. jobs report has put some downward pressure on the U.S. dollar, which could benefit the GBPUSD pair. However, investors are still cautious ahead of the U.K. budget announcement, which is expected to have a significant impact on the pound. The Bank of England's monetary policy decisions and the upcoming U.S. presidential election are also contributing to the uncertainty in the market. Overall, the news paints a picture of a market in flux, with both bullish and bearish factors at play. Now, let's take a look at the daily chart for GBPUSD. We can see that the pair has been trading within a fairly narrow range in recent weeks, suggesting consolidation and indecision. This range is defined by support around the 1.2900 level and resistance around the 1.3100 level. The pair has tested both these levels multiple times in recent weeks, suggesting they are significant and could hold. If the GBPUSD breaks above the 1.3100 resistance level, it could signal a bullish breakout, potentially targeting the 1.3200 or even the 1.3300 level. On the other hand, a break below the 1.2900 support level could indicate a bearish trend, potentially targeting the 1.2800 or even the 1.2700 level. It's important to note that these are just potential scenarios and the actual price action could deviate from these projections. Let's zoom in on the 1-hour chart to gain a clearer picture of the short-term price action. The 1-hour chart reveals that the pair has been forming a series of higher highs and higher lows in recent days. This pattern suggests that the bulls are in control and the pair could be on its way to a breakout above the 1.3100 resistance level. However, we also see a significant volume spike on the most recent candle, which could be a sign of a bearish reversal. It's too early to say for sure whether this is a reversal or just a temporary correction. We'll need to watch the next few candles to see how the price action unfolds. We've seen a lot of fluctuation in the short term on the 1-hour chart. Let's see how the 15-minute chart is showing us this price action. The 15-minute chart gives us a very detailed look at the intraday movements of the pair. This chart reveals that the pair has been trading in a very volatile range, suggesting a lack of clear direction. We can see multiple instances of price whipsaws, where the price quickly moves up or down before reversing course. This type of price action can be challenging to trade because it's very unpredictable. It's important to stay patient and avoid entering trades based on short-term price fluctuations. To better illustrate these short-term swings, let's zoom in on the 15-minute chart and look at the price action during the last 24 hours. The price action during the last 24 hours has been particularly erratic, showcasing these rapid price movements and reversals. This further emphasizes the importance of looking at the bigger picture when trading and avoiding chasing short-term price fluctuations. This type of price action is a clear indication that the market is indecisive, with both bulls and bears vying for control. As traders, we need to be patient and wait for a clear signal before entering a trade. Now that we've analyzed the charts, let's recap the key price levels to watch and make some unbiased predictions based on the data. On the daily chart, the 1.2900 and 1.3100 levels are key support and resistance levels, respectively. A break above the 1.3100 level could trigger a bullish breakout, potentially targeting the 1.3200 or 1.3300 level. Conversely, a break below the 1.2900 level could indicate a bearish trend, potentially targeting the 1.2800 or 1.2700 level. However, these are just potential scenarios, and the actual price action could deviate from these projections. It's important to note that the short-term price action on the 1-hour and 15-minute charts has been very volatile and difficult to predict. The pair has been exhibiting rapid price whipsaws and reversals, suggesting a lack of clear direction in the market. We'll need to wait for a clearer signal before entering any trades. Overall, the market sentiment is cautious, with both bullish and bearish factors at play. The news is mixed, with both positive and negative developments for the pound. The upcoming UK budget announcement is expected to have a significant impact on the pound, adding further uncertainty to the market. The key price levels to watch are the 1.2900 support and 1.3100 resistance levels on the daily chart. A break above the resistance level could signal a bullish breakout, while a break below the support level could indicate a bearish trend. However, the short-term price action is very volatile, making it difficult to predict the pair's direction. As traders, we need to be patient and wait for a clear signal before entering any trades. Remember to always manage your risk and use stop-loss orders to limit potential losses.